Good morning, everyone. We'll wait just a minute here to as everyone joins our session this morning. We hope everyone is having a great Wednesday morning. All right, we'll wait just a few more minutes. Sorry, not a few more minutes, just another 30 seconds or so to let more join the call today. While we are waiting, please make sure if you have questions during our session today, feel free to enter them into the Q&A. All right, let's go ahead and get started. Welcome to Building and Leveraging Credit to Get Financing and Grow Your Business. My name is Paula Whittigand. I'm the Professional Development and Training Manager for the Arizona SBDC Network. We're happy you're joining us today for this very informative session. I have helping me today Esmeralda Estrada. She's going to be co-host. She's going to keep an eye on our Q&A, some questions coming through. If you have any questions, you can certainly, questions of Esmeralda logistics types of things, put them in the chat, please. And I think we'll go ahead and get started. Before I turn things over to our guest speaker, I'd like to go ahead and just give you a very brief overview of SBDC services. Some of you may be very familiar with what we have to offer, but some of you may be new to the SBDC. So as you see here, really what we offer is one-on-one, no-fee, confidential business counseling to small businesses. You can be a small business from starting of, I have an idea and I don't quite know what the next steps are, to a small business that's established and looking to grow or sustain your business. We help businesses across that spectrum. It is technical assistance and covering many different areas. Just think of anything such as business planning, strategy, access to capital, financial review, sales and marketing. We have expertise, counselors that have expertise in areas such as international trade and export and technology and commercialization. So across the Arizona network, we have a wide range of knowledge and expertise that is here to support you in your business venture. And our services are offered at no cost or low cost. And this is possible because we are funded by the Small Business Administration and also at our by local community colleges and Maricopa Community College here in Arizona. So with that, I would like to turn it over to Gerri Detweiler. Gerri Detweiler is the education consultant for nav.com. She brings a wide and in-depth range of knowledge about business credit. And so Gerri, we'd like to welcome you today. And I will stop sharing my screen and allow you to share yours.
Wonderful. Thank you. Thanks so much for having me today. And I'm excited to talk about business credit because this is one of those mysteries that many business owners don't know about. And then they find out later down the line and they realize, oops, I missed this in the training. So I need to figure out how to incorporate this into my business planning. So no matter where you are in your business journey, as Paula just mentioned, the SBDC can help you from beginning to establish businesses. Same thing with business credit. I've talked to businesses that are just starting, as well as businesses that have been around for 10 years and didn't know anything about business credit, and now they want to get started. So this really is applicable no matter where you are in your journey. I also want to mention that we will be sending you the slides, or the SBDC will be sending you the slides, as well as we have a guide that we created at NAV that's like a checklist to walk you through this process. So you can absolutely take notes and certainly ask questions, but you will also have those additional materials to support you after the webinar is done. So hopefully you'll find that helpful. I would like to start out though with a quick poll, and I want to find out how many of you are familiar with business credit. Have you checked your business credit? Have you not checked it, or are you not sure? I'd love to just see where everyone is at in this journey before we get started and delve into the information.
I will be ending the poll now since everyone has answered.
And I'm not seeing results. So what did we find out? Oh, there we go. Okay. So most of you have not. A few of you have. That's good. So regardless, again, whether you've checked it or not, I think you're going to hopefully find these tips valuable for your small business. All right. So first of all, let's just touch on why business credit matters. I want to dispel a myth, and there's a lot of information out there on social media and on the internet that makes it sound like if you build business credit, it doesn't matter what your personal credit is. Your business can get access to millions of dollars in credit without any personal guarantees. And I think there's a lot of hype surrounding that is not necessarily realistic. Business credit is one part of building a healthy business, a business that is fundable, a business that you may decide to sell down the road. It's a tool in your toolkit, but it's not everything. So I don't want anyone to feel misled that, oh, hey, if I build business credit, I don't have to worry about my personal credit. I don't have to worry about my financials. That's not true, but it is a part of that puzzle. So business credit can be used when you go to get business insurance, whether you need a surety bond or maybe just general liability insurance. They may check your business credit. Bonding. In fact, I'll tell you a quick story on the insurance front. We had a NAV customer who owned an insurance agency, and he was trying to get errors and omissions insurance for his business, for his insurance agency, and he was having trouble. And he found out that his business credit was mixed with that of another business. They had a similar name in another state, and that credit was negative. So once he got that fixed, then he was able to get his insurance. So it really is something that could come into play with insurance. If you need a surety bond, they may check business credit. If you want to get large contracts, sometimes government contracts, they often will check business credit. And an example there, I was on a call, a webinar with accountants, and one of them reached out to me afterwards, and she said, I worked in the supplier department at Walmart, and we would always check Dun & Bradstreet, which is a bureau you're going to hear about. And a lot of our, suppliers didn't even know what I was talking about when it came to that. So that could come into play when you go for larger contracts. And then financing. So certain types of financing will check business credit. Sometimes it's just to make sure there's nothing negative. There's nothing that is a red flag to them, like collection accounts or judgments or tax liens, things like that. Other times they may be looking for a business credit score. It varies widely depending on the type of financing that you're seeking, but it can play a role in that. All right, so who are these credit reporting agencies that collect business credit and sell business credit reports? Well, you've probably heard of Dun & Bradstreet. Fun fact, they are the oldest credit bureau in the United States, and 5 former US presidents worked for them, including Abraham Lincoln back in the day. So he was a reporter, which meant he went around gathering information that would then be translated to Dun & Bradstreet so they could check credit. So they've been around for a while. You probably know Equifax and Experian because they also supply consumer credit reports. So when we talk about our personal credit, Equifax, Experian, and TransUnion are the big three. When you talk about business credit, Equifax also has a business or commercial credit division completely separate from consumer credit. Same with Experian. They have a small business credit division that's completely separate from personal credit. So those two databases never touch each other. They do have products that can pull data from consumer and business credit. We'll talk about that in a moment, but those are completely separate databases. Now, I want to set you up for the reality that when you go to check business credit, it's going to be a much different experience than consumer credit. So just be prepared for this because it's not going to be the same as what you're used to when you check your personal credit through annualcreditreport.com or Credit Karma or one of those services. It reminds me, I've been in this field for about 3 decades now, and business credit reminds me where personal credit was when I started, because in those days it was much more fragmented and it wasn't as streamlined as it is today. And business credit sometimes feels like that. So here's an example of just a business credit report where you see they have their personal credit's pretty similar, and that's often the case, no matter which bureau you check it from. But you see the business credit scores are very different, and that's not unusual at all. It's not unusual to see a business that has a low credit score with one bureau and a high credit score with another. And we'll talk about why that happens in just a moment. Another thing you'll notice is that they typically do not list the names of the companies that appear on your business credit report. And this is really confusing at first because, well, it could be confusing for a long time, but they don't have to, and they don't. So with consumer credit, you get your credit report and you see, oh, it says I have a mortgage through Wells Fargo or my credit union. With business credit, they're just going to say what type of account it is, but they probably won't name the company that's reporting. There's a lot of theories as to why that happens, but the bottom line is they don't have to, and most of them don't. So you have to sometimes be a little bit of a detective to see if it says bank card, which is going to be a credit card like Visa or MasterCard or American Express. Which one is it? You might have to look at, the latest reported balance, for example, or how long it's been open to understand which one it is. If you're starting out now building business credit for the first time, you have a little bit of an advantage because then you can keep an eye on it. You can see when companies show up, which accounts those probably are. And then free credit reports are not required. So with personal credit, you get, and I was actually many years ago was involved with the groups that pushed for the legislation that gave consumers free credit reports. Before that, you had to actually go and buy your credit report, and you'd probably have to take time off work to go down to the credit bureau to get it. With business credit, there's no federal legislation and really not state legislation either. So there's no right to a free business credit report. And when I joined NAV 6 years ago, that was one of the unique things that drew me to the company, was the fact that it was the first place to offer free business credit to business owners. Otherwise, it's pretty much you can go directly to the bureaus and pay for reports. And typically they run about $80 and up. At this moment, I don't even think Equifax is selling business credit reports directly to business owners. I think they're just selling it to customers. So it can be hard to get that information if you don't go through some sort of third-party service. Payment history differs. So with personal credit, if you've checked your consumer credit report, you've probably seen a grid that shows the past 2 years, month by month, whether you've paid on time. Sometimes you'll see that on a business credit report, but often what you'll see is a summary of the percentage of time that the bills have been paid on time. And we'll talk about this a little bit more in just a moment. And so if you see that it wasn't paid on time, you don't always know when that happened. So sometimes you have to do some digging to try to figure out whether that's accurate or whether that's a mistake that you need to try to correct. So I have a question here, and I think we can put it in the chat. Does that sound good to put the answer in the chat? What's a good business credit score? Does anyone have an idea? And we will get to your questions at the end, by the way. I see we have some questions coming in, which is great. So if you just want to drop in the chat, and I'll take a look there to see, anyone know which credit bureaus or what's a good business credit score? Okay, we have a great guess there. 80 for Paydex. That's excellent. 60, 70. Okay, so good. It looks like we have a pretty educated audience here. Typically what I'll get when I ask this question in my workshops is answers like 680 or 720 because you're thinking of a consumer credit report. But typically there's a different scale for business credit, but it can vary dramatically. So Experian traditionally is used one score and one score range called IntelliScore, and 0 to 100 is the score range. 100 is a perfect score. 80 to 100 is excellent. However, I will tell you that the newest version of IntelliScore, which I don't think is widely used yet, but the newest version is going to have a scale that is similar to consumer credit, the 300 to 850 score that you're used to. So we may see that coming down the road in the next, months or years, where you may see a different score for that. Paydex is one of the scores that Dun & Bradstreet offers, but they offer a variety of credit scores. With Paydex, 0 to 100 is the scale, at 80 to 100 is an excellent score, but there are other scores that Dun & Bradstreet offers, they have very different scales. And same thing with Equifax. The score that NAV shows to customers uses the delinquency score range, which sounds like a scary name. It doesn't mean that you're delinquent. It actually is predicting delinquency, but it's 224 to 580. So my best tip here is if you are checking your business credit, just make sure you see what the score range is. So you're not thinking a number in your head that might apply to a different credit score. So always look at the number, but also look at the range to see where you fall in that range, and that may be helpful to you. There is also a business credit score called the FICO SBSS score. So FICO is a company that creates credit scoring models. They don't have any information about how people pay their bills. So they always partner with a data source, which is usually a credit bureau. So for example, you see your FICO score for your consumer score, it's going to be pulled, that data will be pulled from Experian, Equifax, or TransUnion. With the FICO SBSS, it's interesting because they can pull the business credit from any of those business credit reporting agencies that we've mentioned. They can pull the consumer credit of the applicant from any of those consumer credit reporting agencies, and they can use those two sets of data to create a single credit score. And they can even pull in consumer data from multiple owners. So for example, if you're applying for an SBA loan of $350,000 or less, they will pull a FICO SBSS score, and the lender will have to, if there's owners with 20% or greater ownership, they have to include they don't pull it directly, but they have to include the data from each of those owners, as well as they have the option of business credit data that they want to pull in. And they can even actually add some information, financial information about the business if they want as well. And then all that data gets analyzed to create a single score. So the score range with the FICO SBSS score is 0 to 300. 300 is a perfect score. And for depending on which SBA loan program is using this score, the minimum score requirement can be between 145 and 165 out of 300. And I can tell you that at NAV, because we do offer this with a paid NAV plan. We also have free plans. I can tell you that some people will get a great FICO SBSS score just based on their personal credit, without any business credit, but it is helpful. So if you have good business credit, it can help you get that good FICO SBSS score that your business might need for a pre-screen for one of these SBA loans. So just keep that in mind. So let's dive into the meat of this, which is, I think, probably why you're on this webinar, is you want to know how to build business credit. And my philosophy and goal is I want to make it as simple as possible for you, because you have so many things to do in your business, and becoming a credit expert doesn't have to be one of them. So there's some simple steps that you can do to build good business credit for your business without getting into a lot of what I think is sometimes overkill on the business credit topic, where sometimes people get so into the details that they forget that, the main goal of the business is to make money and to bring in clients. I do recommend that you have a business entity when you're building business credit. That would mean like an LLC, S Corp, C Corp, or something similar. You don't have to. You can build business credit as a sole proprietor. But if you think about it, if your goal is business financing, or really to separate your business and personal finances, you can't effectively do that until you have a legal entity that is its own entity. Until you do that, you and your business are still the same legal entity, right? That's just you, and you have a business. So creating this structure can be helpful. If you are going to build business credit as a sole proprietor, the one thing I would encourage you to do is to get something on the record for your start date, and to make sure you try to choose a name for your sole proprietorship that you plan to transition to your legal entity. And I say that because the credit bureaus often can sort of match a business that changes names, or businesses that have maybe subsidiaries under different names. But if you just operate without any kind of business name, then you create a business name and you incorporate in that business name, it can be difficult for them to sort of pull that old history in. And as we'll see, a longer credit history is better, an older credit history is better. So, get yourself on the record. And that would mean you could pick out a business name, make sure it's safe for you to use, that it's not trademarked somewhere else. For example, there's not a legal reason you can't use it, and then file a fictitious name registration with your state. You may need a business license. Then you would have that fictitious name that you could use to get the business license. And that would also get you on the record. You get an employer identification number from the IRS, an EIN, and that would give you, an official start to your business as well. So all those things can help get you on the record with that business name. And then also you can then use that as you go to build business credit. And a lot of the resources I'm going to mention, they do want to see an EIN, employer identification number. It's not always required for sole proprietorships, but it's probably a good practice to go ahead and get that. If you're operating as a sole prop, if you're incorporating, you're going to have to get that anyway. So you'll have that. I also recommend you have a business bank account. Again, it's not required for business credit, but it is often required for business financing. And so the sooner you can get that established, the better. We have a whole resource center on the NAV website. If you just Google nav.com/business checking, or I don't know if there's a dash in there, but Google nav.com and business checking. And there's a whole resource center with checking accounts that are easy to get as a new business, don't require high minimum balances. Some are open to sole props if you're still a sole prop. All of that may be helpful, but I would recommend it because as you build business credit and as you want to get business financing, a lot of lenders are going to require business bank account statements to verify your business revenues. So having that and starting that sooner rather than later is a really good idea. Plus, it's just a lot easier with taxes and everything else to separate your business and personal finances. There are also some foundational steps that are helpful when you're going to build business credit. It's useful to have a business address. There are times where you will have to give your personal address. For example, the IRS is going to require a physical address. Your bank is going to require a physical address. They're required by law because of, anti-money laundering regulations to have that physical address. But then you could have a mailing address that could be a post box. It could be a USPS postal box address. They have those for businesses. I've had my own corporation for 20 years because I was full-time freelance for many years, and I am full-time freelance again. And I've used a mailbox as my mailing address. And that way too, when you put it on your website or you give it out, you aren't giving out your personal address. Just kind of nice to be able to do that. Another handy thing is to have a business phone number, and you don't have to, like in the old days, go and get a business phone line, which is expensive from your local telecom. There are a number of services. GoDaddy has one. I'm blanking on the name right now, but it's in the e-guide that we're sending you. There's Google Voice. It's a phone number that can actually ring on your personal cell phone, but it'll be a distinctive ring. You'll have your own voicemail that you set up. You can set business hours. It's great professionally too, just to know when that phone rings, if it's a business call or a personal call, so you can answer accordingly. And it can be really handy. And this is just helpful. Again, these are all things that help demonstrate that the business is real and it's not a hobby or it's not a potentially fraudulent situation, because business identity theft is a big problem. I also recommend you have at least a one-page business website. Even if you operate primarily on a social media site like Facebook or Instagram, I would highly recommend you have a one-page business website. Part of that is that you can secure the domain name associated with your business. And also then sometimes lenders will just Google the business. And there's actually a credit score that Experian has that can pull in information about the business from online sources like social media accounts or websites and score your business based on that information. So just even a one-page website with your own domain name can be very valuable to helping establish your business legitimacy. And then I really encourage email addresses that are at your domain name versus using Hotmail or Gmail or Yahoo or something like that. I would encourage you to look. It's not super expensive. Google's domain names, for example, run, I think, $5 a month for that. I once had a new dentist that for my daughter, where they wanted me to send her her medical records through a Yahoo email address, which just did not make me feel very secure or very great about that practice. So this is part of, looking legitimate for your customers, but also for potential lenders. And this information can show up under the information about your business in your business credit report, which anyone can order. Anyone can get your business credit. So it's good to have those foundational steps. And if you're feeling a little overwhelmed with that, some of that is in the e-guide. And of course, your SBDC advisor is there to help you with questions about that process of getting your business set up and making sure that it's legit. Another thing you'll want to know is your industry code. And this is going to show up likely on your business credit reports. And these are codes that were created initially by the US government for statistical tracking purposes, but they've kind of become a shorthand for the lending industry too. So lenders will target into certain industries that they want to lend into, and they'll exclude industries that they don't want to lend into. And if your industry code on your business credit is wrong, you may have trouble getting financing. An example for me with my business was I tried to set up a invoicing system to receive ACH payments for my business. And they told me they wouldn't accept it because my industry code was listed as credit counseling, which I am not a credit counseling firm, and they wouldn't work with a credit counseling firm. So that was something where I had to get that industry code changed to be accurate. So you may run into that same issue. So here's my suggestion. There's an easy way to look up that SIC is the older code, NAICS is the new code. It drills down a little deeper. If it's on your business credit, just check it. There's a NAICS website, and I think we reference it in the e-guide that you can use to check and make sure it accurately represents your business. And then if not, or if you're not sure, or you're not sure when you're incorporating your business, which code to choose, then go ahead and look on that website. And they actually have there's one that's a paid service, but there's a free website. And the free one you can access through the US Census website, census.gov. And they have something called Dr. NAICS, where if you don't know which code is right for your business, you can email them and tell them, here's what my business does, and they'll tell you which code. So it's really nice that service is available for free, and that will help you make sure that you're identifying the right code for your business. Another step is to request your DUNS number. Now, a question I get all the time is my EIN, my employer identification number for the IRS, is that the equivalent for business credit like my social security number is for personal credit? If you've ever gone to check your consumer credit, you have to give your social security number. And if you fill out an application, you give your social security number. The EIN is not the same in the business credit reporting system. It may be there, it may not be, but each of those credit bureaus is going to develop its own identifier for your business, identifier number. And in the Dun & Bradstreet system, it's called the DUNS number. And historically, you request your DUNS number. And in the past, the DUNS number was also used as your identifying number for federal government contracts. That recently changed. The federal government now uses something called the UEI, the Unique Entity Identifier number. They don't use DUNS numbers anymore, but for many, many years they did. So they set up the system where you could request your DUNS number for free. And you can still do that on the Dun & Bradstreet website. And that number will then be your identifier. You can also go to the Dun & Bradstreet website and just do a quick search to see if your business already has a DUNS number. It may, and you may not know it. So you can do that quick search and see if it does. And if it doesn't, you'll want to request it. You will not do the same with Equifax or Experian. Equifax and Experian will assign a identifier for your business when they put your business in their system. And usually that's when they either get an account that's reporting, or in the case of Experian, they can also go to government registration sites and pick up the government registration information from the Secretary of State, for example, and then start a file on your business, even if you don't have any credit.
Hey, Gerri, this
Yes.
is Paula.
Yep.
I see there was a question in chat about those acronyms that you just ran through very quickly.
Sure. Yep.
Maybe you could just review the UEI, SAM, and those cage numbers.
Yep. So the SIC code, or SIC code, is the Standard Industrial Classification Code, and that's the old version of the numbers that are used to identify the industry your business is in. The NAICS code, North American Industrial Classification System code, that's the new version of those industry codes. So that's the acronym for those, and those are going to identify the industry that your business is. For example, freelance writer, or paper manufacturing, or mining, or whatever it may be. And it'll drill even further down in mining to the specific type of mining that your business is in. So it gets pretty detailed. Here, DUNS is just the acronym for the number that goes in the Dun and Bradstreet system. So this is like when you check your personal credit, they make you put in your social security number, and it's not the only way they find your credit file, but it's kind of the glue, right, that pulls together the information to help them gather the right information about you when they prepare your credit report. With Dun and Bradstreet, that's the number that they assign to your business to pull up your business credit report. And you'll see that some of the like the vendors that I'm going to talk about in a moment, when you fill out an application with them, they may ask for your DUNS number. So I do recommend you go ahead and proactively get this if they haven't, or if Dun & Bradstreet doesn't already have you in their system. And they have a very simple lookup search function on their website. And then the other one I mentioned was a brand new one, well, pretty new because it just launched this year, and it's called the UEI, Unique Entity Identifier. And it's the number that's used in the government system called SAM. So if you were to apply for a federal government grant, or maybe disaster assistance, I'm not sure if they use this number, but they may, or with federal government contracting, you have to be registered in SAM. And so now what they do is they assign something called this UEI, this Unique Entity Identifier. If you're already in SAM, then you should have been assigned one, but you may have to check just to make sure that your business has this number. All right. And then once you get started, the main thing that credit reports do is they supply others with information about how you've paid your bills. And then they use that information to say, hey, this business is likely to pay its bills on time in the future because here's what they've done in the past, right? Just with consumer credit. They take a look at what's happened in the past to help predict what's going to happen in the future. And the biggest issue I see with business credit, and I've seen this with 20-year-old businesses as well as with startups, is they don't have accounts that show up on their business credit. With personal credit, if you go to get a mortgage or a student loan or a credit card or a car loan, there's almost a 100% certainty that that's going to show up on your consumer credit. Very, very few lenders don't report on consumer credit. With business credit, it's different. Not everybody reports. So some may report to Equifax, some may report just to Dun & Bradstreet, some may report to all three, some may just report negative information. So what I'll see is someone will, and I get a lot of questions about this on the NAV blog, where someone will say, I just checked my business credit. I've never paid anything late, but I have a low business credit score. Why? And most often the reason is that there's just not enough information reporting there to establish that the business is low risk. And so that means a low credit score, because a low credit score means higher risk, because they just don't know. They don't know enough about the information about the business to report it. So what you want is accounts that show up on your business credit and are paid on time. And an easy way to get started, very, very easy way to get started, whether you're a brand new business or whether you're established business, is with something called Tradelines. And these are just typically accounts with vendors or suppliers that show up on your business credit. So I'll give you an example. The co-founder of NAV, Levi King, his first business was a sign manufacturing business. And this was 20 years ago, and he didn't have any credit, so to speak. And he would have to come up with the funds to buy the cement and the steel and the plastic, and then manufacture the sign and then bill for it. So, I mean, he might get a deposit, but he had to put a lot of money up front and then get paid for it, later. And sometimes he was just scrambling to get his customers to pay for the signs he had installed so he could make payroll or, take on another job. And he said that one of the most transformative things for his business was when he found out that one of his suppliers said, you don't have to pay for this all up front. You can just fill out a credit application and you could buy it on credit. And he said that was just a big aha moment for him, because then he could, manage his cash flow better. So there are a lot of businesses that offer credit to their customers because they want these business customers to buy their stuff and not go to a competitor, right? So you fill out a credit application and they'll let you pay in, say, net 30 terms or net 60 terms. And that just means you have 30 days to pay or 60 days to pay or 90 days to pay. You can certainly, if you have vendors or suppliers right now that you're buying product from or buying supplies from, you can ask them, do you offer credit terms? And do you report to business credit would be, ideal. But if you don't already have that, you can go to the link here, and it's also in the e-guide. We have a list on the NAV website of vendors that are very easy to qualify for. They don't check personal credit. They don't report to personal credit, but they do report to at least one of the major business credit reporting agencies if you're trying to build business credit. So just keep in mind that that's an option for you to get started. And it's an option if you don't have great personal credit to start establishing some business credit. I still want you to work on your personal credit. It's still very, very important, but it's an option for you to get started building business credit, even if you don't have great personal credit. So, that's one way that I would encourage you to get started. I should mention, I didn't have a slide up before on this, but there is another agency that you may come across called the Small Business Financial Exchange, the SBFE. And they aren't really a credit bureau, but what they do is they're like a data warehouse. And a lot of lenders like banks and credit unions, major lenders that work with small business customers will report information to SBFE, and then a company that wants to buy a credit report can purchase a credit report from Experian or Dun & Bradstreet or Equifax that includes SBFE data. So it's a little confusing because you may or may not see that information. Currently, there's no option to order an SBFE credit report as business owner. So this could pop up with you not knowing it. So I hate to give you something I can't give you very specific advice about yet. But I want you to be aware of it in case you are in a situation where let's say you get a notice from the bank saying you didn't qualify, and we checked with SBFE, and you're saying, who's SBFE? Gerri didn't talk about that in the webinar. Well, that's who that is. It's like this data warehouse that supplies information to the major commercial credit bureaus. All right, another way to get business credit or to build business credit is get a business credit card. So most small business credit cards report to at least one of the major business credit reporting agencies. And we have charts at nav.com. One is the first one, /reports, is the ones that it shows whether they report to personal credit. So if you don't want your business credit card on your personal credit, that's the list for you. The second one is which business credit bureaus they report to. So that will help you understand which ones might help you if you're building business credit. One great thing about small business credit cards is that most of them are available to startups. So as soon as you start your business, as long as you have a sufficient, meet their minimum personal credit score requirement, and most of them are going to be 680 or above. Some go down to 650. And there are a few credit builder cards that go lower. So for example, Wells Fargo has a secured business credit card. You have to go to the branch to apply, which is a little clunky, but they do have a secured business credit card for those who don't have great personal credit. But that is a great way also to help you start building business credit, is by getting a business credit card that will show up on your personal credit. So that may be an option for you, even if you have a brand new business or an established business. Okay, so we're almost through this part, and then we will have some resources and time for questions. The most important thing you can do is pay on time. With business credit, they typically use something called DBT, or days beyond terms. So with personal credit, if you miss a payment on your credit card by a few days, it usually doesn't show up as late on your personal credit, because they go in 30-day buckets. So let's say your credit card was due on the 15th, you were busy, you forgot about it, you paid it on the 18th, it probably will not show up as late on your personal credit. With business credit, they use something called days beyond terms. So let's say you get one of those vendor accounts, and you get net 30 terms. That means the payment is due 30 days from the invoice date. And let's say you pay it on day 32. You're 2 DBT, and that will show up on your business credit as 2 DBT. So you're a couple of days late. That's different than consumer credit. Now, let's say instead you have net 60 terms. So your payment is due 60 days after the invoice date. Maybe you've established a really good relationship with the supplier. They don't want to lose your business, and they let you take 60 days to pay. If you paid on day 62, you're still 2 DBT. So paying on time is so important for business credit because it's so granular. Now, if you get busy and you forget and a payment gets a few days late, or if a client pays you late and cash flow is tight, you pay a few days late, it's not the end of the world. Your credit score is probably not going to drop like a rock, like with personal credit. But if you're building business credit, try as much as you can to get those, at least get the minimum paid on time, because it can show up and it can affect your business credit score. Now, before the pandemic, Experian was reporting that the average DBT for all businesses across the US was 11. So it's not like every single business is paying every single thing on time. But again, if you're trying to build business credit, I'd encourage you to set up systems, whether it's alerts or automatic payments, whatever it is you can, to make sure that you don't forget or get busy, and that minimum payment doesn't get paid on time. Now, another thing you need to do when you check your business credit, if you have a business credit report, is to make sure it's accurate. There was a report in the Wall Street Journal, this is a little while back, but it found that 1/4 of business owners who reviewed their business credit found errors or missing information that would have put them in a higher risk category. So my philosophy about this is, the reason we see more mistakes on business credit than consumer credit is partly, not all, but partly because business owners don't check it. And ultimately, we're the only ones who can look at our credit, whether it's business credit or personal credit, and say, you know what, that's not right. I didn't pay late, or, oh, I didn't realize that was on there, whatever it may be. But really, we're the ultimate arbiter of whether our credit information is accurate. So do check it to make sure that it is accurate. If it's not, you'll have to dispute it. There's not the same process with business credit as there is with personal credit. With personal credit, you have this federal law that says they have to fix mistakes within 30 days, and the credit bureaus usually make it very easy. It's not always as easy with business credit, but it's certainly something to look at and to consider correcting. Another thing I want you to quick target when you check your business credit is something called UCC filings. And these are filings under what's called the Uniform Commercial Code. So when you get financing from a lender, but as a business, very often, not always, but very often, they'll file a notice with the local courthouse. It's what they call public record, which means anyone can view it. And it's basically saying, hey, we have interest in the property of this business. And if this business defaults, we can collect on this collateral because we have this, UCC filing against the property of the business. And a great example of this is if your business obtained an EIDL loan, an economic injury disaster loan during the pandemic for more than $25,000, then the SBA filed a UCC1 filing just to alert other creditors, hey, we have dibs on the property of this business. Now, what we've noticed at NAV is that sometimes creditors are great about placing UCC filings, but they aren't always great about releasing UCC filings. So once the debt is satisfied, they should go back and file a notice of release or whatever it's called in your state, indicating that the UCC filing has been released. They aren't always great about that. So sometimes it will look as if the business has all these UCC filings, but the debts have already been satisfied. So you at least want it updated to indicate that it's been released, because some lenders might look at the UCC filings and say, hey, there's no collateral here that we could go after if we needed to. And so you could get turned down for financing based on the UCC filings that are outdated or inaccurate on your business credit. And again, this isn't always the simplest process to get resolved, but there is a procedure if it's inaccurate and you need to try to get either the creditor release it, or you can file usually a form with your state, with the courthouse to get a request to get it removed or released. All right, so let's talk about some resources and what you can do right now. So first of all, you will get a follow-up with the Build Business Credit Checklist. I would encourage you to go through the steps. We've talked about them, so they shouldn't be confusing to you. But if you have questions, I'll be happy to put my email address in there so you can reach out to me. A great place to start is to get some Tradelines that report. So you have a few accounts reporting. How many? I recommend starting with 2. That way you can, manage them, buy things you buy anyway for your business. I mean, some of the vendors on that list will sell you copy paper or Keurig cups for your coffee machine, or, things you're going to use anyway. I don't want you to go spend money that you don't need to spend, but use that to buy things that your business needs, pay it off on time, and start building those business credit references. Consider getting a business credit card, make sure that you pay on time, and then monitor and build your business credit. Now, I will mention that NAV is not affiliated with your SBDC, and you never need to use any third-party services to get help from your SBDC. We are not endorsed. The SBA and SBDCs don't endorse third-party services. I hope you find this, useful, but you don't have to use NAV to get help from the SBA or your SBDC. If you do decide to check out NAV and sign up, we do have a link, nav.com/SBDC, just so we know you're working with your SBDC and we can, respect that relationship. And so NAV is the only place to check and monitor your business credit for free for multiple sources. With a free NAV plan, you'll get letter grades for your credit scores. So if you're in an A range for your business credit, great. Don't worry about it. You can move on to other things. If you're in a B or lower, you may be able to do some tweaking or build some additional references in order to get stronger business credit, and then just stay on top of it to make sure that it's accurate. There is a big problem with business identity theft, by the way. I was a victim of business identity and personal identity theft last year. And so even if your credit's good, just checking it on a regular basis can be really helpful. Trust me, I've been through that recently, and it's not fun to deal with. NAV does have paid plans, and with the paid business boost plan, we report that monthly payment to the credit bureaus as a trade line. So it's never negative, because if you decide you just want to downgrade back to a free account, we just stop reporting. It's not going to say, you did something wrong or you were late. It just doesn't report anymore. So that may be something you want to check out as a reference for your building your business credit. I also saw that someone in the chat mentioned eCredible. eCredible is a partner that we've worked with at NAV, and what they do is they can, for a small fee, they will report bills you're already paying to business credit. So that's another resource that could be helpful for you as you build those business credit references. All right, so that's all I had to share for this part. And it looks like we have a lot of questions. So I am ready to take questions however you would like to do that.
All right, I'll start reading some of the questions. Let me just scroll back up. So Trevante asked if you could share the website to get the own business email.
Oh, it's in the e-guide that you're going to get. So in the Build Business Credit Checklist, we have some suggestions there for services, but really any email where you get so you have a business website, let's say mine, gerridetweiler.com, right? That's my domain name. And I just went to Google and signed up for Google Workspace, which is, I think, $5 a month. And they give me an email address at gerridetweiler.com. So, or you can do it through, if you have a website through GoDaddy, or lots of services will give you, whoever you have your domain name through, the website address through, that's usually where you can also get an email account with the name of your website. So that way the email is tied to your business as opposed to just being a generic email address. And again, it's not required for business credit, but I think it's helpful as you grow your business and go to get financing, and also just for customer, for the professionalism for dealing with your customers.
All right, so next question is, how do you get Allie to report to them? Do you just call them?
I'm sorry, how do you get who?
Allie, I believe it might be
ALLY?
yes, a bank. I'm not
Yeah.
sure.
They may report or they may not. It's really up to the company whether they report or not. And sometimes with banks, they report into the SBFE, as I mentioned. And so when you go to check your credit, you don't see it because it would only show up if someone purchased a credit report from business credit that included SBFE data. It's confusing, I know, and I apologize. It's the way the system is. But if someone doesn't report, then it can sometimes be hard to get them to report. But certain types of bills, you may be able to get reported through eCredible. So with eCredible, and I'll drop the name of that into the chat, then you could, certain bills can be included that they will report on your behalf for bills you're already paying. So that may be one option to look into, but it's kind of hard. Not everybody reports. And if they don't, it's hard to get them to report. And with eCredible, make sure you look at their business program because they have a consumer product. I'll put it in there. It's Business Credit Lift. And they have a consumer product and a business product. So the business product is what you're looking for. Okay.
All right, thank you. We have someone asking for the website for SBFE. Would that be sbfe.org?
Yes, and you won't be able to buy anything from them. So you'll see what they are, but that's it. Yeah, sbfe.org. But unfortunately, they do not sell credit reports.
All right, thank you. Another question, setting up a profile on your platform generates a soft inquiry with the credit reporting agencies?
Oh, yes, with NAV. So NAV is a soft inquiry, and NAV also matches business owners to financing. So it doesn't sell your information to lenders, but rather it shows you in your dashboard lenders that look like they're a good match based on your profile. And so that's also a soft inquiry until you go to apply. Let's say you see a business credit card in there, it's saying it's a good match. And then you decide to apply for it. Likely at that point, there would be a hard inquiry. There's a few lenders that never do hard inquiries. An example would be Divvy, DIVVY. They are always a soft inquiry for their, it's kind of a business expense management platform with a card associated with it. Divvy never does a hard inquiry. It's always a soft inquiry. So it just depends on the lender's policy. Yet as far as using NAV, it's a soft inquiry across the board, and NAV does not sell your information to lenders.
Thank you. All right, so another question. What if you have multiple accounts and you're 2 days late on both in the same month? Does that calculate as 2 days or 4 for your SBFE?
Yeah, that's a great question. And it wouldn't be necessarily SBFE. It would just be whatever the business credit bureau that it's showing up on would show it as DBT, right? To DBT. Each account would have its own to DBT. It would not total. It wouldn't be 4. So if that particular company was reporting 2 accounts for your business, and each one was 2 days late, then each one would be reported as to be DBT. If it's 2 different lenders, same thing, that it would be based on that particular account. And again, this could be with Experian, with Equifax, with Dun & Bradstreet, or with SBFE, any of those bureaus. It isn't necessarily confined to one bureau that uses that reporting methodology.
Thank you. All right, we have one last question. What about checking credit on vendors?
That's a great question. You can do that. So anyone can check business credit. Your competitors can check your business credit, your potential business partners. And I recommend you consider using that for your business as well. And I'll give you a quick example why. Before I, was full-time employed at NAB, I was a consultant and I got into a business project with a business partner, looked really good. I mean, had a really good reputation in the industry. I was referred by a friend. We did a major project together and I never saw a penny from it. He collected all the revenue and never paid me. And it was at least $40,000 that I lost from that project. And I'm convinced that if I had checked business credit, I would have seen that he wasn't paying other businesses as well, because I'm sure I was not an isolated incident. So if you're thinking about getting involved with a business partner, if you have a supplier that's really key to your business, like if that supplier disappeared, your business would fall apart. Or, I don't know, maybe you're just checking out, your competition. I don't know, for any reason, you can check business credit. You will have to pay for it. The paid NAV account does include the ability to monitor business credit in up to 5 businesses. So you could do that as part of your paid plan, or you could go to the bureaus directly and purchase business credit on other businesses. But especially if you're thinking about getting into a business partnership, I highly recommend you do that. Or if you're going to do anything where you're not getting paid in full upfront, so you're going to take on a client where maybe you'll have a down payment, but you're going to provide them with a whole bunch of stuff and not get paid until it's delivered, I would check business credit.
All right. Thank you so much, Gerri. We're just about at the top of the hour and so much great information, a lot to unpack, definitely, but we will be sending that e-guide to everyone who's participating today. So just to close us out, the SBDC, the Small Business Development Centers, we have offices across the state of Arizona. So if you are joining us from any of the counties within Arizona, know that there's an SBDC center near you with expert counselors that can help you with your business development needs. Gerri had talked a little bit early on about, setting up that actual business. So if you're at that very early stage, your counselors can certainly help you with that. If you're looking for capital and getting access to funding, our counselors can help you with that area, as well as many of the other business development topics we previewed for you early as we just started our session today. So the link for counseling is there on the screen. And we do have, since for clients, oh yes, I wanted just to preview, as a client, you also have access to many of the tools that we complement our one-on-one counseling with our small businesses, things like Live Plan, Growth Wheel, Profit Sense, industry reports. So just keep that in mind. Check us out and request counseling and sit down with one of your counselors and see how they can help you kind of start or grow or even help you sustain that business. Keep an eye on our training calendar. We have many sessions coming up offered across the state. Our next topic related to credit is coming up November 16th on how smart businesses can leverage credit cards. And Gerri will be joining us again for that topic. So we hope to see you all there in November. And Esmeralda, I will let you kind of close us out for this morning.
Thank you, Paula, and thank you, Gerri, for today's presentation. I will be sending everyone an email today, including the recording of this webinar and the slides for the presentation, along with that e-guide that Gerri's providing for you all. You should be receiving an evaluation, a survey. If you could please fill that survey out, it would be helpful for us so we could provide webinars in the future that would be beneficial to you all. Again, thank you all for today. Have a nice day, everyone.